Hi everybody, this is Gary Dean and this is our nightly video report for Monday, February 29th, 2016. So, last trading day of the month. I had me a little cautious as far as adding anything else, but we saw the bulls give it a try, and by the time the bell rang, we saw a pretty big reversal where the S&P was up 10 and closed down 15. So looking at the bigger picture, this is the daily chart. I'm still believing that's just, you can count them 5 waves, wave 2, whatever you want. For me, it's just easier just doing ABC. So this is our wave A. We made our wave B, and now we should be starting wave C down. Is this particular pattern for sure? We don't know that at all. We want to see some of the support levels break, but minimum for the trades is I'm looking for a closing of the gap of the 1865. So being, my shorts are up here, it would be a pretty nice trade. And I may take a little off, see if it bounces, and then just let the rest ride. But right now, it would make sense if this is the wave C is starting. But there's still a lot of work that the bulls have to do. The bears have to do to get control of the market again. Now, one is we're at a moving average right now. So this is where some buyers have stepped in, but we have bearish divergences in place, and we hit the 50% retracement level. So again, there's more reasons to think lower is coming before higher, but really what the bears have to do is push it through this. If we get that, then there should be a pretty quick move down to the right around the 1898 level, which is the other moving average. But this megaphone top pattern here has me thinking that we're going to go through this moving average and probably head someplace down into the 1860 range. Now, again, like I said, it would make sense if this is a wave C and we're going to come take these lows out, but we're not sure that is that's the pattern that's in play right now. It makes sense. So you want to, if it gets down and we start getting into oversold levels, you take a little off, wait and see if it bounces, and reshort again. That's kind of what my game plan is. So support is right here. If the bulls try to bounce, then we want to just keep an eye on the previous highs here. If they lose this and it starts going down, we're probably going to see a pretty quick move down to the 1898 and possibly even down to the 1860 level. So bearish divergences still very overbought right here, so there's plenty of gas in the tank for the bears to take this lower. If we take a look at a 15-minute chart, again, we had bearish divergences in place. Now we're a little bit oversold. So remember, we're at a moving average right now. 15-minute, we're oversold, but we really don't have any buy signals. So, and we are at the bottom of this wedge right here. So if the bulls don't defend this right here, that's when the target areas are probably going to be someplace down in these levels here, just based off of the pattern that's in place as well as the bearish divergences. So we are at an important area for the bulls to defend. If they don't, that's when we start seeing momentum pick up. At least what I believe, we're going to see some momentum pick up on the downside. And we really want to keep an eye on the 1900, 1886 level, see how they hold it, because you can see this is a support area here. And if they lose that, then we're really going to see probably a very, very fast move down to this 1868 support zone. And again, that's where I'll start seeing how things play out and maybe take a little bit off and try to trade it. But that would make the most sense is a move down here, especially if we open down tomorrow and break through this bearish rising wedge. This is the target area all the way down between the 1868 and the 1842. On a 5-minute chart, really what we want to keep an eye on if we do get a bounce, this 1939, I'd like to see the bears try to hold it down. If they don't, then we want to keep an eye on the 1943 level. Those are your two first resistance, and then 1947, and you can see that's where the moving averages are crossing. So there's a lot of work that the bulls have to do to push us higher. One is just this resistance here that happens to fit the 23% retracement. Above that, we have this resistance plus the 38% retracement, and then above that, you have the 50% retracement at the 1947 level. So there's there's definitely some work that the bulls have to do to start getting themselves out of trouble. And like I said, it would make more sense if we head lower before higher, but we just want to keep an open mind on everything and see how things play out. So with that, enjoy your night, and I'll talk to you guys tomorrow.